Welcome to Z Analysis. I'm Jake, and we're kicking off today's episode with some shocking facts. The Dow has closed at a record high, with a 1.2% increase, reaching 36,500 points, and the S&P 500 has posted its 8th straight week of gains, with a 1.5% increase, reaching 4,200 points. This is a significant milestone, especially considering the current economic conditions, with inflation at 3.5% and unemployment at 4.2%. The total market capitalization of the S&P 500 has reached $22 trillion, with the top 5 companies accounting for over 20% of the total market cap. This is a clear indication of a bull market, with investors feeling confident about the future of the U.S. economy. These numbers are not just random stats, they have a real impact on the average American's life, with over 50% of Americans having some sort of investment in the stock market, either directly or through their retirement accounts. The current market trend is expected to continue, with many experts predicting a 10% increase in the S&P 500 over the next quarter. This could result in significant gains for investors, with the potential to increase their retirement savings by thousands of dollars. Additionally, the strong market performance is also expected to boost consumer spending, with Americans feeling more confident about their financial situation.
That's really interesting, Jake, and I'm sure our listeners are eager to learn more about what's driving this trend. So let's take a step back and introduce ourselves and the topic. I'm Sarah, and I'm excited to be co-hosting this episode of Z Analysis, where we dive into the latest news and trends in the U.S. economy. Today, we're discussing the recent market news, including the record high close of the Dow and the S&P 500's 8th straight week of gains. This is a complex topic, with many different factors at play, but we'll break it down in a way that's easy to understand. We'll explore the history behind this trend, the current situation, and what it means for the average American.
That's right, Sarah, and to set the context, let's take a look at the history behind this topic. The U.S. stock market has been on a wild ride over the past few years, with the COVID-19 pandemic causing a significant downturn in 2020, but since then, the market has been steadily recovering, with the S&P 500 gaining over 50% since its low point in March 2020. The market has been driven by a combination of factors, including the ongoing economic recovery, low interest rates, and the rise of new technologies. The pandemic has also accelerated the shift to online shopping, with e-commerce sales increasing by over 20% in the past year. This trend is expected to continue, with many experts predicting that e-commerce will account for over 20% of total retail sales by the end of 2025.
It's amazing to think about how far we've come, and now, let's talk about the current situation. The market is currently experiencing a period of high growth, with many stocks reaching new highs, and investors are feeling optimistic about the future, with over 70% of investors predicting that the market will continue to rise over the next 6 months. The current market trend is also being driven by the strong performance of the tech sector, with companies like Apple and Amazon leading the way. The tech sector has been a key driver of the market's growth, with many companies in the sector experiencing significant increases in revenue and profits. This trend is expected to continue, with many experts predicting that the tech sector will continue to be a key driver of the market's growth over the next few years.
The current situation is indeed very interesting, and now, let's talk about the impact on Americans. The strong market performance is having a significant impact on the average American's life, with over 40% of Americans having some sort of investment in the stock market, either directly or through their retirement accounts, and with the market reaching new highs, many Americans are seeing their investments increase in value, with the potential to increase their retirement savings by thousands of dollars. The strong market performance is also expected to boost consumer spending, with Americans feeling more confident about their financial situation. This could result in a significant increase in economic growth, with many experts predicting that the U.S. economy will grow by over 3% in the next quarter.
That's a great point, Jake, and I'd like to follow up on that. What does this mean for the average American's daily life? For example, will they see an increase in their paycheck, or will they have more job opportunities, and how will this impact their overall financial situation? The strong market performance is also expected to have a positive impact on the job market, with many companies expected to increase their hiring over the next few months. This could result in a significant decrease in unemployment, with many experts predicting that the unemployment rate will drop to below 4% by the end of the year.
Those are all great questions, Sarah, and now, let's hear from some experts. Many financial analysts are predicting that the market will continue to rise over the next few months, with some predicting that the S&P 500 could reach 4,500 points by the end of the year, which would be a 10% increase from its current level. This is based on a number of factors, including the ongoing economic recovery, low interest rates, and the rise of new technologies. The experts are also predicting that the strong market performance will continue to boost consumer spending, with Americans feeling more confident about their financial situation. This could result in a significant increase in economic growth, with many experts predicting that the U.S. economy will grow by over 3% in the next quarter.
That's really interesting, Jake, and now, let's talk about what our listeners can do today. What are some practical steps they can take advantage of this trend? For example, should they invest in the stock market, or should they pay off their debt, and what are some other options they have? There are many different options available, including investing in a diversified portfolio of stocks and bonds, or paying off high-interest debt, such as credit card debt. It's also important to have a long-term perspective, and not to make any rash decisions based on short-term market fluctuations. It's also a good idea to consult with a financial advisor, to get a personalized plan that takes into account your individual financial situation and goals.
Those are all great points, Sarah, and to summarize, our listeners can take the following 3 practical steps today. First, they can invest in a diversified portfolio of stocks and bonds. Second, they can pay off high-interest debt, such as credit card debt. And third, they can consult with a financial advisor to get a personalized plan. It's also important to have a long-term perspective, and not to make any rash decisions based on short-term market fluctuations. By following these steps, our listeners can take advantage of the current market trend and achieve their long-term financial goals.
That's a great summary, Jake. And finally, I'd like to ask our listeners to like and subscribe to Z Analysis if they want to stay up to date on the latest news and trends in the U.S. economy. We'll be back with another episode next week, so be sure to tune in. And thanks for listening to this episode of Z Analysis. We'll see you next time. We'll continue to provide in-depth analysis and insights on the U.S. economy, and help our listeners make informed decisions about their financial situation.